I'm trying to take advantage of the market downturn. Are you dying, dog? What are you doing? Welcome back, Freedom Savers. It is like 2:30 in the morning my time, and my schedule for sleep is really screwed up at the moment. And I'm going to have to get back on schedule since I'm supposed to go to work very soon. Well, not today, but tomorrow, as in tomorrow. Anyways, I was thinking about all this volatility, and I just got through watching Ryan's channel, Independent Investor, by the way. If you haven't watched his channel, go check it out. It is one of the best investing channels on YouTube right now. But I watched his live stream after the fact. I didn't participate in the live stream itself. And again, thank you, Ryan, if you do see this, for the shout out. And earlier in the day, there was a comment on one of his videos where someone was very upset with the volatility in the market. Apparently they've tried to invest in the market before and lost money and got out, and now they've hopped on YouTube, they've seen some videos, they got motivated to invest, and so they put some money in the market, and now this happens with the stock market, the correction happens, and he's just like, I'm out, I'm done, I throw in the white flag, I give up, and he's pulling money out and probably losing money. And I understand that I make a joke out of investing on a lot of my videos. I'm very nonchalant, I guess, about losing money, whether I'm losing money or making money or whatever it is. This is a new journey for me still. I have invested in the past. I have some investing experience, good and bad. But my experience level is much less than someone compared to like Ryan. And Ryan is a great guy. He's very down to earth, and he cares a lot about the people watching his channel. And I give him all the praise in the world for that. He is very serious. So he may not be for everybody. He is very serious, almost all the time. He takes this stuff very seriously, but he knows his stuff. And I get that. A lot of times I'll watch him, I'll be like, man, you are just too serious sometimes, man. You need to lighten up a little bit. But I get it. He's trying to get a real message out there to people, and how important this really is, and how dangerous the stock market can be if you don't know what you're doing, and you're not going into it knowing the risk that you're taking. I mean, while we have a 10-year bull run, of course, everybody's investing. They think it's just going to keep going up and up and up, and it's not. That's not how the market works. So anyway, I just want to make a quick video on the market volatility and how I'm handling it. It's a little more serious video than I normally do. I have done a couple of serious videos and about getting young people to invest in the first place and buying their freedom, which my message is still there. I totally... If I could go back to my 20s, guys, I would not be working a job right now at age 48. I guarantee it. So how am I handling the market downturn? I've written down some notes on my screen, so if you see me looking up a few times, I'm sorry. But it's not scripted, but it's just notes I wanted to keep track of and what I want to present here. One thing I'm doing is I'm deploying cash from my 401k money market fund. So in 2008 and 2009, aside from my personal investment, in my 401k, I pulled all my money out of stocks at the very worst time. And I lost a lot of money during that time. And I just set my allocations to all go to a money market fund. So for all that time, the money that I pulled out, which was much smaller than I had, and all the money I've contributed has gone into a money market fund. If you don't know what a money market fund is, it's basically a savings account. It's a fund that tries to maintain the value at $1 for $1. So it's cash, essentially. And so I recently had $65,000 sitting in a money market fund in my 401k. So one step I'm taking during this market volatility, I'm trying to take advantage of the market downturn So one thing I'm doing is I'm pulling money from that money market fund, and what I'm doing is I'm taking 10% out of that and splitting up into all of the stock and some bonds, but mostly stock funds that are in my options to pick in my 401k, which are pretty limited. But the good thing is they are Vanguard funds, so they're cheap for the most part. So every day I am pulling 10% of whatever's left in that money market fund out and diversifying it across all the stock funds that I possibly can in there to get my money deployed into the market while the prices are lower. Now, do I think this is the bottom? Probably not. It's probably going to continue dropping. I don't know. I have no idea whether it's going to go up or down. And anybody that tells you that they do know is full of crap. Nobody can predict the future. Nobody can predict what hundreds of thousands of investors out there are going to do. So the first time I took 10% out, I had 65,000. I took about $6,500 out of there and deployed it into stocks. That was the beginning of the week, maybe somewhere in there. The next day I took another 10% out. That was like 5,900, deployed it into stocks. Next day, another 10%, and I've done this for about 3 or 4 days now. I have another order in for Monday, and that one's for like $5,400 maybe. I'm pulling out of the money market account and throwing into stocks. So I'm finally deploying that cash that I stupidly pulled out of the market in 2008 and 2009 back into the market where it belongs. So that's number one. Number two, I'm working as much overtime as I possibly can. This weekend is the first exception for me in a long time that I have not worked 6 days a week, about 10 hours a day. And that's because I got food poisoning and I had stuff coming out all crevices of my body. Don't want to go into that. So anyways, it was horrible and I'm taking the weekend off. But next week it is Christmas week, and guess what? I'm working it. So I'm doing that. I'm working the holiday for double time, all that good stuff. Bringing in more cash to fund my addiction of investing, which it kind of is an addiction because I'm putting money into the market right now when I know I should be paying off debt. And it's not a good thing, but how bad can it be to invest? I don't know. I need to get that debt handled, and that's something I know I need to handle. So anyway, that's number two. Number three is I'm investing more money in the market than I have been. So it's been a bull run. It's been a little volatile, going up and down, just, flatlining. It's been down and then recovering, all that good stuff. So I've been putting a steady $60 a day in my Roth to max it out by the end of the year. I can't increase that because there's a max on it, $5,500 for the year. But what I can do is put more money into my taxable accounts. So as you've seen, if you've been watching my updates, I have put more money into my aggressive dividend portfolio, which has some pretty risky stocks in it, and I'm well aware of that. And I wouldn't consider all those stocks like solid long-term portfolio stocks. But I'm willing to take that risk and just see if I can take advantage of this market downturn a little bit. I also recently created a completely new portfolio, which is a completely random portfolio of stocks. And I have deployed $1,000 into that one. And I don't plan on putting any more in that one for probably ever, but we'll see. But right now I'm deployed $1,000 into that, and I know those are much riskier. Well, actually, I don't know. I haven't done my due diligence on those. That was kind of the point of this portfolio, is to see what happens when you invest in random stocks with no due diligence and just see if I get lucky. It's kind of like my gambling. It's kind of it's kind of like me going to Vegas and gambling $1,000. So I've been to Vegas recently when my daughter got married, and I gambled on $7 playing video poker for over a week. And I never broke my $7. So for me, this is just like going out and gambling. Like, I have wasted so much money in my lifetime on stupid crap that I didn't need. And to me, if I can work overtime and make 1,000 extra bucks, and I want to go to Vegas and gamble, a lot of people do that, right? It's a vacation. Let's go to Vegas. We got a $1,000 budget. We'll go gamble it away, call it good, have fun. To me, this is my Vegas. The stock market is my Vegas, and it's my long-term investment. It's both. I can make that stock market whatever I want. It's like the biggest casino in the world if I want it to be. It can also be a great wealth building tool if I want it to be. So in my Roth, I am using it as a wealth building tool. In my aggressive dividend, I'm testing aggressive style investing, hopefully for wealth building, with the higher risk of losing some money as a learning process. And then in the random portfolio, that's my casino. That's my gambling. And just for fun, just to see what happens. So, but either way, I'm deploying more money in the market right now because the prices are lower. And I'm hoping to take advantage of that. And I'm hoping even the random portfolio I'll get lucky on. There are some things I should be doing that I'm not yet. One thing I should be doing is I should be gathering all the toys I've gathered over the years that I don't even use, like PlayStations, like mobile PlayStations and just toys, bicycles, stupid stuff. All the toys I've gathered over the years that I don't ever use anymore. I should be taking all of those and selling them and getting extra cash to deploy in the market. With me working 6 days a week, that does make it hard. It's not impossible. If I wanted to do it, I could make time and post them on Craigslist or wherever and get them sold. So to be completely honest, it's probably just laziness on my part at this point. But I need to do that at some point. And of course, the last thing that I've already mentioned that I should be doing and I'm not is paying off debt. I have a credit card with over $6,600 on it right now that has a 10% interest rate on it. And it's just stupid of me to put money in the market when I know I'm not going to make over 10%, when I can make 10% instantly by paying off my debt. So that's just stupid part on me. I really should be deploying all my cash into that until that's gone. And come the first of the year, I'm going to try to get myself under control more and not deploy as much into investing and concentrate on my debt until it's gone. Then I can do whatever the hell I want investing. So that's what I'm doing for the market downturns. The thing with stock market volatility that you have to keep in mind is it happens. It happens. It's going to be volatile. That's just the nature of the market. The prices of stocks go up and down on a whim based on a news article or some guy coming out and making a speech. Boom, stock market crashes. Next day, boom, stock market recovers. I mean, and it could be one day, it could be 2 weeks, it could be a month. We could go into recession for 2 years. Nobody knows. That's the thing. The true answer is I don't know. And nobody does. Don't listen to anybody out there telling you that they know whether the stock market's going to go up or down. There are signs, there are trends. You can do technical analysis and guess. It's still guessing. You don't know. All we can do is, just like any investment, make our best guess from the information we have, whether that be financials, history, etc. So for me, while this market's down, I'm trying to put more money into it, even at a riskier pace and with riskier stocks. That may be a good thing. I may fall flat on my face and lose my shirt. And you know what? That's fine, because I have not invested any money that will change my lifestyle if I was to lose it. Like if I lost all of it, well, I'm still here. I still got a job. I still got a roof over my head. I still got food. Still got my puppies. I'm good. I think that's one big key to investing and not being so emotionally attached to it, is not investing any amount that can change your life if you lose it. You need to treat the stock market like a casino. Don't put any more in it than you're willing to lose. That's what it really comes down to. If you treat it that way, even if you lose it all, you're like, I had fun. Off you go. Now, I know this isn't easy for a lot of you. You don't make a lot of money, especially if you're young. When you're young and you're not making a lot of money and you're working jobs and busting your butt, and I understand. I've been there. I know. I've worked paycheck to paycheck. I've day to day, not knowing where the next meal's coming from. I've been broke, married with a young child, a baby just born, and not knowing how to feed them that night. I've been there. So now that you have a little money and you're trying to invest it and do something right for yourself, I'm going to break down my entire channel for you right now. All right, I'm going to break down the entire channel here in the next 5 minutes. So stick with me. My entire channel is don't be stupid like me. That's my entire message. My entire message is don't be stupid like me. That's the entire message of my channel. Don't sell when the market goes down and crashes. As long as you're invested in good investments, don't sell in a down market. You don't have to keep investing. You don't have to buy stocks when they're on sale. Just hold. Don't make harsh decisions based on short-term volatility. All right, it's short-term volatility. It will recover. It always has in the past. If it doesn't recover in the future, well, that's something new. All we can go with is the information we have provided to us. Again, the reason to only invest what you could afford to lose and not have your entire life change. And I'll be happy to discuss with anybody that wants to the riskiness of different investments if you want, because that's another thing to go into, and I don't want to get into too much detail here, but you can invest in less risky investments, such as treasury bonds and stuff like that, and still make a profit and have an investment without as much risk as I'm taking in my crazy portfolios. So basically, in 2008 and 2009, I lost quite a bit of money because I got scared and I said, I've had enough. I threw in that towel and I said, I'm out. And I lost quite a bit of money. And I've learned from that. I stayed out of the market for a long time after that because it hurt. It hit me. But I learned from it. And that's the point I'm trying to get across to you is I want you to learn from other people's mistakes, specifically mine. All right. I'm trying to get you to not make the mistakes I've made in my life. I'm 48 years old. I hardly have anything for retirement. I don't want you to be in that same situation. I want you to start investing now when you're young. If I could go back to age 20, here's the steps I'd take. If I had a 401k at work, first thing I'm going to do is put as much money as I can into the 401k to get company match. Just company match. You don't want any more than that, just company match. That way you're getting that free money from the company. Then I'm going to open up a Roth IRA because it grows tax-free. It's the only investment tool I know of that will grow tax-free and you'll never have to pay taxes on it. And I would put as much money in there over the years, as much as I could, until I could max it every single year. After I could max that every single year, then you kind of have a choice at that point on whether you want to open up a taxable account or contribute more to your 401k. Just a little note here. If you have a Roth 401k, I highly suggest going with the 401k until you can max that out. Then you can go taxable. For those that have a normal 401k, it depends on what you think the future of your taxes are going to be. So you can either open up that taxable account or contribute to the 401k. It's probably more beneficial to contribute to the 401k since you have the tax benefits, but you don't have the control over your investments like you do in an individual account. So that's why I prefer to go with the individual account and pay the taxes on it rather than maxing out my 401k. It probably isn't the right decision, but that's a choice that you're going to have to make at that point. Now, if you're going to open up a taxable account, here's how I would do that. I would invest in dividend-paying stocks because that's how I prefer to invest, but growth is fine too, or a mix, even better. Get your diversification. I mean, I own a growth stock. Well, I own a growth stock, Amazon. And I probably will own more growth stocks in the future. The point here is I would open up the taxable account with solid investments, just like I did my Roth. And I would invest over and over and over and put as much extra income as I could in there until I was producing enough dividend income that I could live off of. And between that and my Roth and the 401k, I'm pretty much set for the rest of my life. So I could probably retire early from investing and living on nothing for, I don't know, 10, 15, 20 years on the taxable account. I could probably live on that. And then on top of that, I've got the Roth, which I could withdraw from, especially if it's producing dividends at age 59 and a half. And on top of that, I've got the 401k. And just keep investing. Have good diversification. Use ETFs if you don't want to learn the stock market and learn every individual stock and what EPSs are and revenues and growth and all that good stuff. You don't want to worry about any of it. There's solid ETFs out there that you can buy, like VOO, VOO, which is a Vanguard index fund, which follows the S&P 500. There's also bond funds, like what was it, SPY, I think, SPY. So yeah, you create a very simple, basic portfolio with ETFs, and you follow the same strategy. As for those in 401ks, if you don't know what to invest in, just look at the funds, look at the expense ratios, look for the ones with the smaller expense ratios, and try to get a diversity in it of emerging markets, value funds, growth funds, etc., and just try to diversify across all of them, including bonds. You should have a bond fund in there as well. And most of them nowadays just have a target retirement fund. So target retirement 2052 or 2055 means that you're planning on retiring somewhere around 2055. And what those funds will do is they'll invest more in stocks while you're young, and as it gets closer to 2055, it'll convert more and more of those into bonds or less risky investments. Anyways, long story short, I want to make a video telling you how I'm handling the volatility, why I'm so nonchalant about it sometimes, and how I understand it is serious and it affects people in very serious ways, especially if they have money invested in there that they can't lose or they feel will ruin their future. And you really need to find your risk tolerance. And that's a personal thing. There's calculators you can figure out, your risk tolerance. What would you do in this situation, this situation? And they're helpful, but you don't know until you experience it. And that's the thing. Until you go through stock market volatility and through recession and that type of stuff, you don't really know your risk tolerance. So this is a learning experience for a lot of you guys. And while you're young, use that learning experience. If you're invested in the market right now, watch my videos, watch Ryan's videos, watch Lydia's videos, watch everyone, see how they're doing and see what kind of strategies they're putting out there and how it's working for them. It's kind of one of the reasons I'm doing all my experimental portfolios, because one, they're fun, kind of like gambling for me, and two, you get to see how they perform. What happens if you do that? And that's good. You can learn from that. So anyway, that's all I wanted to do. I just wanted to put a video out telling you what I'm doing during the volatility, or what I'm doing during the downturn. I don't know how long it'll last, and give you a little advice on how to handle it yourself and what I would do if I was young. So I hope this video helped. Hope you got something out of it, and happy holidays, guys. Hope you have a good Christmas. And really, puppy, really, I'm trying to make a video. Can you not see I'm trying to make a video? Yeah. I love you too. Alright guys, thanks for watching. I appreciate it. Be sure to hit that subscribe button down below, and if you liked the video, hit that like button for me. If you want to hear any specific type of information, anything that you're interested in, you have any questions, just drop me a comment down below. Let me know what you think. Let me know your opinions on this video or any other video I've made. And if you know anyone else that might be interested in this video, please be sure to share it on your social media and share the knowledge. Thanks guys.